Should you wait for mortgage rates to drop even further? Let's do the math. Mortgage rates have just dropped to near 6%. That's the big news out there everywhere. In fact, I'm going to share some info on my screen to show you that rates have really come down significantly. Now, everyone's gearing up to say, hey, maybe they'll go further. There's no way of knowing, okay? So currently, I'm making this video in March of 2026. The 30-year fix is right near 6%. That's really fantastic compared to what rates have been. The 15-year fixed is in the mid fives, okay? And I love a 15-year note. If you can make the cash flow work, or just delay some gratification where you're really not making much for a while, just know that that 15-year fixed loan is going to really serve you, especially at 5.5%. And then the 30-year VA loan is definitely in the mid fives to low sixes. I do want you to know though, Kyle on my team has a client under contract and he's a veteran, so he's using a VA loan. We were able to we had him go back and forth between banks because banks are absolutely fighting for your business right now. And I really encourage you to do that. And this he's active duty military, but he was able to get a rate at 4.75. And that is right now. That just happened a few days ago. That's not hype. That's not BS. That's us saying, here are some bankers, get the best deal you can, take it to the next guy, get the best deal you can, take it back to the first guy, and guy A was able to beat guy B pretty significantly with that 4.75. And that means, the lower the APR, the lower your payment, which means you can probably spend more, or as investors, you can cash flow more. Okay. So it's really important. If you can get a low APR, that's really huge. Always run your number, a little high. Maybe you plan on 6.25, but if you can get in the mid fives for your APR, that's such a win and your numbers will really thank you. All right. So just keep in mind that with rates in the near sixes, low sixes, we have some really great opportunities right now in the market. Freddie Mac is averaging 5.98, and then Bankrate is saying around 6%. I did a bunch of research just this morning on this. But the reality check is it just depends on who you ask, but never stop with the first guy you talk to. Get the base rate and then shop it around. What I typically tell my clients when they're buying through Team 912 is you need to have a bank pre-approval letter before you can even look at real estate. That's the law. As an agent, I'm kind of stuck. I can't really do a whole lot, some kind of a pre-approval from a lender. However, once you go into contract, that's when you become this really nice piece of meat for bankers, okay? So within the first couple of days, you can't wait because you're typically gonna just have a couple of weeks to get financing secured. So once you go under contract on that property, shop around. And that is what our veteran did. He had a signed purchase and sale agreement, signed by all parties. He's under contract. He had 30 days to get it done. And he just hit the phone the next day. And arguably, it's going to save him thousands of dollars over the life of that loan. And we're so proud of that. We wanted him to get a great deal, but with him getting a rate in the fours, he's ending up with a great house at an even better deal. And he's going to have money left aside for repairs. He's super happy about that. So when we look at forecasts, people are forecasting that the rates are going to be in the high fives. Again, you can probably get that right now with some work, but there is no guarantee. We do have a new Fed chair coming in May, and I know everyone's really hoping that he will drop the rates. However, during COVID, we were in the threes. As much as I would love to see that again, I have yet to hear one economist tell me that they think that's going to happen. We really do think there will be some cuts to come in May, but I want to warn you, May, June, July, that is high buying season. So when the rates do cut again, most likely prices are going to creep up because prices are depressed right now. Not significantly, at least here in Savannah, but a little bit. Things are still sitting a little bit longer. People get hungry, and when they get hungry, you have a lot more opportunity to go in and get a price reduction. If that house has been on the market for 5 minutes, you aren't going to get much of a price reduction week one. Even in the first 2 weeks, you're very unlikely to get a price reduction. But with these rates in the high fives, low sixes, plus being able to go in and say, hey, I'm going to need, $5,000 in seller concessions, or I'll need a new water heater or a termite bond. You have so much capability to really get a little bit more out of the seller when we're in a market like this. We have not quite hit that high buy season yet, and I think it's a great time to buy because the rates are fairly low. And then again, you can shop that around and try to get a better deal. So one other thing that you need to keep in mind is now is also becoming a really great time to cash out refi. If you're like me and you had to cash out refi in 2022, 2023, 2024, you have some high rates. In fact, I have a DSCR loan right now. I think it's an 8.25. That is so brutal. And every month I make that payment and I see what I'm paying in interest versus what I'm actually getting back in my pocket, which is where I'm paying in principal. And it's really awful. Now, the downside of a DSCR loan is that there is a prepayment penalty. Okay. I can't cash out refi. I mean, I can, but I do pay some kind of a penalty if I cash out refi within the first 5 years. And I think I've only had that loan for around 3 years. It might be just under. But I was doing the math this morning. And again, this becomes a math equation. So when you look at the math on the cash out refi, it's important to look at the lender rates, okay? When you initiate a new loan, which that would be a cash out refi means I'm getting a brand new loan with a lender. So I'm going to take this loan, I'm going to shop it around. I have great credit. I do have solid income. I'm a good borrower. That's the hard part, okay? The easy part is getting a cash out refi. So I'm going to speak to my current lender and I'm going to say, Mr. Bank, how much are my fees if I do a cash out refi right now, if I pay you off early? Okay, there is going to be a termination fee. I need that number. I don't have that number right now. I'm working on it, but I need that number. So what is he going to charge me? Most of your loans hopefully do not have a prepayment penalty. So if you don't have a prepayment penalty, you don't even need to contact the current lender for that. Okay. The second question that you need to be asking is how much is the fee to do a cash out refi? It should be around 1.5% to 2% of the loan amount. Now, in my case, I'm most likely going to only cash out refi what I owe because I don't really need to take cash back out on the property. I just want to lower my APR and also lower my payment. I'll be happy enough with the cash flow at that point. But you may want to take some cash out and do the Burr method where you pull all of your cash out. We have kind of hit that period where it's going to be a great idea to do either the Burr method, cash out refi, and just get a lower payment, like whatever you want. Again, you're in that slow period where bankers are hungry. They're going to fight for your business. So in my case, I have a property I'm going to refinance. I'm a great borrower. I'm already overpaying on the payment. So I'm going to look for the best deal for myself. So it becomes a math equation. So I'm going to establish if it's going to be 1.5% to 2% of the loan amount. That's fine. I'm okay with that. I'm going to add that into my calculator. But what I really want to show you is how much you're going to save with a cash out refi. And this is really fantastic. Okay. With mortgage rates in the 6s, it looks like I'm going to save almost 2%, hopefully a little over 2%. I do owe right around $200,000 on this property. So I'm going to just use myself as a case example here in that if I cash out refi $200,000 that I already owe on my DSCR loan, I most likely will save 2% on that based on the current rates. And again, I have good credit. The old principal interest would be around $1,100, which is exactly like my loan. I pay about $1,300 a month and I'm paying most of that in interest. It's so awful. New principal and interest, $955. Okay. So that is really good. That's an extra $200 a month in my pocket. So I'm definitely going to want to do that. 244 savings. Closing costs will be around $4,000 and my break-even point will be about 16 and a half months. Am I still going to have that loan 16 and a half months from now? I definitely will. There's no way I'll have it paid off. So when you look at that savings over 30 years, that's $87,937, okay, over 30 years. So let's say I do have closing costs of $4,000. When you subtract $4,000 from $87,000, that's a net of $83,000. Heck yeah, I'm going to do that. That's great math, okay? That's a win for me. I'm not harming the banks. I'm paying my current lender a fee to get out of the loan. They're happy with their $4,000. They'll say, thank you, Julie. I really appreciate that. My new lender is thrilled because guess what? They get to make me a new loan and I'm a great borrower. They know I'm going to pay it. So it's really a win for both lenders. It's a win for me. It's just a win all around. Okay. So now is a really great time to buy property. Low 6s, great. I have so many investor loans in the low 6s. They're still performing. I sat on those when the rates went up. I did sit on those when the rates were low. I should have cash out refied, but it's okay. A loan in the low 6s, you're still going to cash flow, especially if you bought right. But keep in mind, Real estate investing is all about math, and the math right now on the buy side and on the cash out refi is really good. So I really encourage you to keep this in mind. I hope this is helpful. Always keep the math in mind. Real estate comes down to a math equation, and the reason I've been in this industry so long is that I'm really good at math. I hope this has been helpful. If you've enjoyed this, I would love if you'd subscribe, give a like, and comment below. Let me know if you appreciate it. I really appreciate hearing from you. So I hope all is well. Keep investing. And if you're looking to buy investment real estate in Savannah, please reach out. I'd love to be of service to you. Have a great day.
Cash flow Savannah, where the dreamers dwell. Get your hustle on, ring that well bell. From the